Welcome back to Trading Hour. Well, as promised, Interarch Building Products, which reported a good set of Q3 numbers. Remember, the company saw a revenue growth of 15%, as well as a rise in profit after tax of 28%. To discuss more on the company's performance in Q3, we are joined by Arvind Nanda, Managing Director of Interarch Building Products. Thank you so much for joining us, Mr. Nanda. First up, could you reiterate your guidance as far as FY25 is concerned? Last time you spoke to us, you told us that 10% top line growth is what you're expecting, and you had further guided for a top line growth in the range of 10 to 15%. Is there any change? Would you be looking to revise it upwards?
No, there is no change at present. We are hopeful that it might go up a little bit, considering our completion of the orders a little faster, and our profitability and other guidelines are in place. We are trying our level best to increase it a little bit, but a lot depends on how we can execute the orders which we have in hand. That is the key. The sites are clear and the customers have clearances for us. So we are hopeful that it might go up a little bit, but certainly we are on track.
Mr. Nanda, the other point that we just noticed is that the order book on a sequential basis seems to have moderated close to at 1,305 crore. Currently, what is the installed capacity? Last time you told us, it's not an issue of demand, more an issue of capacity. We also understand that there is one capacity, the manufacturing facility at Andhra Pradesh, which has been inaugurated. Currently, what is the total installed capacity? What are the orders in hand, and how is the order prospect pipeline?
See, the capacity that we have, like we have mentioned earlier in pre-engineered building, it is capacity right from engineering to execution. Of course, production is a very critical part of it as well. So currently, we are at about 130 to 140 crores. We are trying to build it up with these new plants coming up to 150 crores by next financial year, next first quarter of the next financial. Currently, it is about 130 to 140 crores. So we feel that, most of the orders today which we are getting are very, very fast track. Even a large order of 100 crores, 120 crores, people want it to be done in 8 to 9 months. So the timelines are becoming shorter. So while the order book doesn't look like it's growing, but we can only take orders up to our capacity to deliver in 8 to 9 months. So I think the execution will become faster as we go, and therefore we should be, as capacities build up, be able to take a bigger slice of the business available in the market. So currently it is about 8 to 9, I would say 9 months we'll have to execute all this that we have got. So we will pick up the order intakes starting from sometime March, April onward, because the capacity will also go up.
Understood that. So you're saying most of the orders are short cycle orders with visibility, or you just need an order book with a visibility of close to 8 to 9 months. We also understand in January, you received a couple of orders from Tata Projects for close to 220 crores. Number one, do you disclose customer information? We believe it is in the public domain. Number two, what is the visibility that you're having from the private side, especially given the fact that you also now have an interesting tie-up with JSPL? So what is it that you bring to the table? What is it that they bring to the table? And is it mainly for the Jindal Group?
See, there is a lot of visibility of the orders. As we can see, again, the budget has incentivized electronics, batteries, solar. This is the new age sector which we are very prominently present, and where all the large projects are. Both these projects of Tata's are battery as well as semiconductor. So therefore, these are the sectors which are growing very fast, and there may be 20, 30 companies currently planning where we are bidding for these kind of products, solar or lithium battery or semiconductors. So, and the budget has incentivized that. So the pipeline of inquiries is excellent going forward. A lot depends on the kind of pricing we get and the kind of dates we get so that we can execute them. Both the Tata orders were a landmark for us in terms that one is for a lithium battery plant, which is the first for Tata's, and second one is for a semiconductor plant in Assam. Both semiconductor, we are also doing one for them for Tata Projects for Micron in Gujarat already. So this is a very good entry point for us. And the JSPL tie-up is more for heavier structures. You see, a lot of these buildings which we are doing currently also, they require heavy structures which we are not very productive and competitive in. Going forward, even high-rise buildings, data centers, these buildings require what we term as heavy structures, which are a little different than what we are doing. So JSPL has a very large facility for that. And they have a very good name. It's not JSPL as a steel provider, but JSPL as a fabrication company which they have.
Understood.
So they have a what they call the fabricated structure company. So we are dealing with them. JSPL, a steel company, we have been dealing for decades. So we will tie up with them to sort of market and sell more of the heavier structure buildings, which are data centers, which could be high-rise buildings.
Right.
High-rise buildings are going big time into steel.
Mr. Nanda, thank you so much. We'll get you once again on the show today. We have a paucity of time. We'll move on.